All right, guys, welcome to another episode of Dive into Real Estate Investing for Newbies podcast. I have a very special guest, Jacob Vanderslice. I'm excited to have Jacob on the podcast. Jacob has an extensive amount of experience and still active in the market. He is an active investor and also owner operator, just does a lot. But today specifically, we'll be talking about self-storages and some of his background and things that he's done over the past and still doing today. So welcome to the show, Jacob.
Cecil, great to see you today, and thanks so much for having us on. We appreciate it.
So Jacob, tell us a little bit about yourself. I see you have your sign in the back, VanWest Partners. Tell us exactly how you got in the business and, what are you doing currently right now?
We got started about 15 years ago doing residential fix and flips. We scaled that up over the years. We've done well over 1,000. I wish we were still doing that because it's a fun line of business, but it's just tough to find deals right now, obviously, especially in Denver. And we got into commercial real estate in 13 and 14, and we started doing adaptive reuse retail projects, which is basically converting old warehouses around Denver into multi-tenant experience-based retail, breweries, restaurants, gyms, tenants like that. And then we got into self-storage in 2015, and we like the asset class because it's been historically resistant to recessions and downturns. It seems to perform really well when things come off the rails, and it seems to go well when things are good. People always have a need for self-storage. And we scaled up the platform since 2015. And through today, we've got 30 self-storage facilities in 8 different states. And we've deployed about $170 million in gross capitalization. And we're still buying. Deal flow is a little more challenging than it was before the pandemic because it's an asset class that a lot of people gave their attention to because it performed well during the pandemic. So sourcing deals is a little bit more difficult, but we're still out there in the streets getting a few done.
Man, that's exciting. So from doing over 1,000 flips to where you are now in the self-storage, is like, was it a no-brainer for you making that switch over or that change over to self-storages? I know with the marketing, did that affect y'all way of finding deals? Did y'all what was the process from switching over, and how did you first stumble on doing self-storages?
Well, anytime we've opened a new line of business, it's always been kind of crawl, walk, run. And if you crawl and it doesn't go well, you don't do more deals, you do something else. But if the crawl goes well, you keep going. And we had studied the asset class for a number of years and tracked performance metrics, default rates on self-storage debt, yields, cap rates. And after studying it for a while, we liked what we saw and we wanted to get into it. And the problem with our single family business was it was just way too transactional. We're constantly relying on finding a deal, stabilizing it, then selling it over and over again. And once you sell a property, the whatever dreams you had for the performance of that property are over. It's done, it's sold, you got to pay taxes, you get your money back, and you got to do another one. We like self-storage because we could deploy capital into the strategy and not be so transactional and kind of shift our thinking to more of a cash flow focus versus a transactional focus. So yeah, we studied it for a while. We got our first deal done with a JV venture with some local high net worth guys here in Denver, built a couple properties in Denver, repositioned an office building into self-storage. So it's kind of programmatic and over time. And we launched our first self-storage fund about 2.5 years ago. And that's gone well. We launched another fund this year that's also going well so far, although we're only 6 months into it, so it's kind of early to tell. But that was kind of the pivot. And I'm sure you and a lot of your listeners have had to pivot their strategy and their business just based on what's happening in the market. And we happen to pivot into self-storage.
So self-storage is no tenants, no toilets, no any of that.
I don't want to directly disagree with you, Cecil, but I guess I will. That's a common thing that people say. And it's true, there are no fair housing laws in self-storage. And if somebody doesn't pay, you just turn off their gate access code versus going through the courts for an eviction. But with that being said, self-storage is very much an operating business. and it's operationally intensive. So customer service is very important. People having a good storage experience is very important. We've got, like a lot of operators, especially in our infill locations, we have theft issues here and there. We have criminal activity here and there. Sometimes we'll have people sleeping in our units overnight, which they're not supposed to. So it is by no means a fire and forget business. I would liken it to a degree to hospitality, and that in the hotel business, people are constantly moving in and moving out, and rates are changing very dynamically, seasonally, and even by the day to a degree. And self-storage is no different. Ideally, no one's staying overnight in our storage units, but we have hundreds of customers move in and move out of our portfolio every month, probably more. And because of that, your operations has to be rock solid.